Hello traders, the title of the video is how to trade the bullish one up, one down candlestick pattern like a pro. Alright, one up, one down candlestick pattern like a pro. Alright, have you ever heard about the candlestick pattern that we call one up, one down? Alright, and what is the bullish one up, one down candlestick pattern? All right. So what are we looking for? Without too much blah 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 from my side, we want the price to be going down fast. So we want a down move. That's the first condition, very important before we see the candlestick pattern. Without that, we do not have a bullish one up, one down candlestick pattern. It is a bullish candlestick pattern, and a bullish candlestick pattern is a reversal pattern after a down move. So we must have first a down move. So this is about the bullish candlestick pattern. All right. So here it is. So you can see the price was going down. It was going up first here, from here to here. Now it start going down. And what do we see? After that, we see that one up. You see that, let me remove some of the line here so you can see clearly what I'm talking about here. Okay, now those are the candlestick pattern I'm talking about here. Now you can see it. Let's remove also my moving average. So here it is. So you see the shadow. All right, this is, we are looking for either inverted hammer or inverted doji. So this is inverted doji. All right, price closing almost at the opening price. This is an inverted doji. All right, either it's an inverted doji or an inverted hammer. That's the one that we say up, one up. So here, look at this one. This is an inverted hammer, either bullish or bearish. Is an inverted hammer here. You see. This is what we call the one up, because the shadow, the tail of that hammer or the tail of that doji is up. All right. One down can be also either a doji or a hammer, and we want the tail to be going down. So that's why the tail is going down. That's why we say down. So one up, one down. This is the pattern we are looking for. And third condition. So price going down first condition. Second condition, we want to see one up, one down. Third condition, those candlestick bar must close before we can declare that the pattern is in place. All right. So if, for instance, I'm now on a quarterly chart and you see like this, okay, but the quarterly candlestick bar is not closed, it means that one up, one down is not yet ready. The candlestick bar must close, because sometimes trader may be on the weekly chart. You see one up, one down, but if that weekly candlestick bar is not closed, it's not yet ready. All right? The third thing that I want to say to traders is that I recommend to traders, whether you are a scalper, a day trader, a swing trader, a position trader, or anything else, or an investor, please, when we are talking about the one up, one down, the best one up, one down candlestick pattern are formed either on a monthly chart, quarterly chart, yearly chart. Those are the time frame I will recommend to traders to use. Though one may see that one up, one down on the 5 minutes, on the 3 minutes, on the 30 minutes, on the hourly time frame, on the 2-hour time frame, on the 4-hour time frame. Sometimes it will work, but if you are looking for more reliable, all right, more solid one up, one down candlestick pattern, especially for swing trading purposes or position trading purposes, even for day trading purposes. So like here, you see on the quarterly chart, that candlestick bar is closed. The following quarter, okay, which is this one here, the next step is to draw a line, okay, highlight the high of the second, the down one, the candle. This is one down. You have to highlight the high of the one down candlestick bar. You highlight the low, okay, of the one down candlestick bar. That's the low. And you want to highlight also the media line of that one down candlestick bar. And you just wait. So as the third candlestick bar is open, repeat, most of the time the price will try to pull back to retest the media line of the one down candlestick bar. Sometimes it will not do that. But very often, as you can see open here, he was trying to go near it. He didn't touch it. It does not have to touch it. But you will see that the market will attempt to try to retest the media line very often. Or if they are very, very bullish, they will just take it from the high. That's why I said you draw the high, look for breakable retest, or a pullback near the media line, or a higher low above that media line. Sometimes the price may even pierce through the media line before quickly closing above it. Those are the things we want to do. So first, price is going down. Look for one up, one down. One up can be either inverted hammer or doji. One down should be inverted hammer or doji. Those two candlestick bar must close. Now highlight the high and the low and the media line of the one down candlestick bar. Expect the third candlestick bar to try to pull back near the media line or the price to break above the high of that candlestick bar and to find a support. And from there, next step, use multiple time frame trading method. One more time, without using a multiple time frame trading method, one is not trading like a pro. Use different time frame. So the setup that we are talking about here, can the price went down first and then we see one up, one down, is a bullish trading setup. Now, if there is no bullish signal, one cannot buy. So don't be surprised that sometimes you will see like this, okay? Price will go down and then you see one up, one down, candlestick bar is closed, and the following candlestick bar will be another bearish candlestick down, which means after that bullish candlestick pattern, there was no signal to buy. And the price continued to go down, did not find support near the media line of the one down, but continued to go down, is becoming more bearish, and the price can go down. Price can go down after that bullish trading setup because the signal was not fired. All right. Now, I'm speaking like this so traders know exactly what to expect. All right. I'm not trying to patronize traders. So you know exactly that it is possible that a price may continue to go down. Do not use the bullish trading setup as a magic one that definitely it will go back up. So therefore, if we see that trading setup, we use the different time frame to control the risk. That's the whole point of talking about multiple time frame trading method. So, by the way, there is a trader who asked me about video about multiple time frame trading method. You can just YouTube search and say multiple time frame trading method by Day Pro Traders YouTube channel, and you will see videos about Day Pro Trader talking about okay, multiple time frame trading. Because I forget to put in your comment section. Okay, my apology for that. Do not get upset. Okay, so this is why we are. This is the bullish. All right, how to trade. Okay, the bullish one up, one down candlestick pattern like a pro. Price goes down. First condition, one up, one down, either inverted hammer or inverted doji. One down, either one inverted, either normal hammer or normal doji for the one down. Okay, and then those two candlestick bar are closed, and we highlight the high, the low, and the median line of the one down candlestick bar, and we implement a top down trading method to trade it. If the signal is fired, we enter and we select a low risk entry point to enter the trade. If at one point the signal fell, just close the trade or secure your gain. All right. So when we are talking about candlestick pattern, bullish candlestick pattern very often are formed at the end of a down move or during a bullish trend. So sometimes you may not see like this. So you see price going up like this, price going up like this. All right. We are in a bullish trend, but during a bullish trend like here, it will pull back a bit, and then you see one up, one down after that pullback, and then the trend continues. All right. But there is also a bearish one up, one down, and I will be recording another video to show you exactly how to trade the bearish one up, one down. Now, for day traders, all right, so I say to you, the best time frame to find the best solid one up, one down candlestick pattern is monthly chart, quarterly chart, and yearly chart. You will see it on a weekly chart, on a daily chart, on a 4-hour time frame. But when you are on any time frame lower than the monthly chart, be very cautious, all right? Be very, very cautious. And because the reason why you need to be careful, I can tell you now, the position traders are hedge funds, are big financial institutions. They take position, all right? They are the one moving the market. And they use the quarterly chart for their trading setup. So what is usually taking place, the reason why I do not say to you to use the weekly chart much, you will see sometimes it works, sometimes it may not work. The reason is that, you see this pattern here, one up, one down the quarterly chart. The people on the weekly chart will see it first. You'll see it first, one up, one down the weekly chart. But the price will continue to go down, or you will be thinking what's going on, what's going on. So 1 week on your weekly chart, you will see it, one up, one down. But it's not finished because the position traders are waiting for the candlestick pattern to form. But on your weekly chart, because you are on a lower time frame, you see one up, one down, you think it's set. Yes, your weekly candle is closed, it's set. But the position traders are looking on a quarterly chart and they want it to be set on a quarterly chart. So you have to understand the influence, the power of the quarterly chart. Those are hedge funds, big financial institutions, the banks use the quarterly chart for position trading. All right. Though we can apply this strategy on a weekly chart, all right. So the best approach is to see like this, all right. Okay, ready, and then you can switch your weekly chart and then your daily chart. You will see a lot of these trading setup on a daily chart. Sometimes it will work, sometimes it may not work. Another thing I need to mention about this pattern, very important, is that the one down is on its own, okay, the one down candlestick bar, this one, is on its own a powerful bullish candlestick pattern, because if it's piercing through, because you see the long tail, I talked about this before, is piercing through a key level, all right, that key level is a support level, because you see the tail, price went down all the way through that key support level at $10.55. It fell below it, but quickly closed above it. It means that people bought this stock, HP stock. I'm talking about HPQ, HP Incorporation, belonging to the technology sector here. The AP is HPQ, Hotel Papa Kilo. So the one down candlestick bar on its own is a powerful, all right, bullish candlestick pattern if it is piercing through a key level. See here? But because we have a two scenario here, the one up is piercing also through another key level, and the one down is also piercing through another key level. So now we wait for the third candlestick bar. We had the high, the low, and the median line of the one down candlestick bar, and then we implement a top down trading method. The only time this method will let you down is if you do not use a top down trading method. One more thing before I close this video is that this is a technical analysis, and we are looking at just one stock, all right, HP stock. One should not ignore to apply okay, this strategy in combination with the trading triangle, the market first, the S&P 500, the sector, before HP or the financial instrument that we are analyzing. One should not also ignore the economy news and the fundamental. So you may see that it is set nicely, and or a signal is fine. If the fundamentals are weak and there are a lot of bad news, or the market itself is bearish, you see that, okay, everything will go back down, and you'll be wondering why it did not work, because some element, okay, are influencing the technical trading, and we need to be aware of those factors, the news, the economy news, the fundamentals, all right, and the trading a triangle, all right, very, very, very important. So this is it, the end of this tutorial about okay, how to trade the bullish one up, one down candlestick pattern like a pro. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. To summarize the video, we are looking for a financial instrument to go down first to reach a key level. And then we are looking for one up, one down candlestick bar, either one up, inverted doji or inverted hammer, one down, either a normal doji or a normal hammer. Those two candlestick bar must close. Okay, and then we highlight the high, the low, and the median line of the one down candlestick bar, and we implement a top-down trading method to trade it without ignoring the economy news, the fundamental, and the trading triangle. All right. We are the GSTW24 traders talking about how to trade the bullish one up, one down candlestick pattern like a pro. Happy trading to you all and speak to you soon.